Welcome to this week's market drama. We'll begin with the S&P 500, which was up 1.6% for the week. It is now up 13.9% for the year. NASDAQ was up even more, up 3.2% for the week. It is now up 17.8% for the year. The reason that NASDAQ led, a big reason, was inflation data came out better than expected, right, which tends to favor growth stocks versus value stocks. So let's go a little bit deeper into that. So the U.S. Consumer Price Index came out, as well as the Producer Price Index, which gives us kind of the supply side of the equation instead of what the consumer is doing when it comes to prices. And for May, they both came better than expected. Overall headline CPI inflation came in at 3.3%. Expectations were at 3.4%. When you exclude food and energy and look at core CPI, it was 3.4, which was better than the 3.5 that was expected. So after a couple of months of hotter than expected inflation, we now got 1 month that was in line and one that was better than expected, which obviously the market favored, right? Specifically growth stocks like Nvidia, stocks like Google led the way when it came to NASDAQ. Versus, for instance, the S&P, where obviously technology is a huge sector, but NASDAQ is much heavier on the technology stocks. Also, the FOMC met. They left interest rates with no change as expected. The one thing that did change is they have something called the dot plot, where they essentially, each governor says where they expect interest rates, where they expect growth, where they expect inflation to be. And specifically for interest rate, the March dot plot had pointed out that we were going to see 3 cuts in 2024. This last week's updated version only had 1 rate cut penciled for this year, right? So going back to what I've been saying now for a number of months, which is I don't think the market will suffer if the Fed doesn't cut interest rates because the economy is doing well, because inflation might be taking a little bit longer. That's not enough to derail the stock market rally. And basically what we're seeing now is that the Fed's telling us, hey, we might cut only once this year, yet the S&P, NASDAQ are near all-time highs. As long as earnings hold up, I think that story can continue. Next week, we have retail sales data as well as housing starts will continue to tell us a picture on the economy, right? Because one thing is inflation coming down at a slower rate. We do have a recession that could alter the stock market trajectory. So looking at retail sales, looking at housing starts are important data points to continue to see what's called a soft landing for the economy this year. That is it for this week. Stay tuned for next week.